You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for the Rockin'est Option Show, at least on this network. Maybe on the planet. I'll leave that up to you to make your own decision. Yes, it's time for the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. 600-plus episodes of this one program. We are uploading it to a new outlet yet again today, and we nearly broke the system with so many episodes. And that's just one show, listeners. We have 14 others on the network. Thousands of episodes going back a decade now. Thousands of episodes, thousands of hours of options goodness. The easiest place to find all of it, of course, the mothership, the flagship, theoptionsinsider.com, or just grab our main network feed pretty much in any podcast store of your choosing: iOS, Android, Google Podcasts, iHeartRadio, all that fun stuff. Of course, you can always grab our mobile app as well. Also available iOS, Android, and the beloved Fire OS. I promise you I check into how many people are using the Fire OS version. I haven't gotten around to that yet, unfortunately. Maybe for next show, I will look into that pressing material. And of course, we always welcome you to join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr. MIXLR. You guys have seen the link. We tweet it out. We put it out on Facebook and social media and in our newsletter and email and everywhere else. So if you haven't seen it by now, you're not paying attention. Just grab it, save it, bookmark it, do what you got to do. Also, you can set up an account in Mixlr and follow us there. I know quite a few do that as well. So you'll be notified instantly the second we go live, not just for this show, but every show we broadcast live on our network. So Vol Views, Twifo, all of that good stuff. You can get it live. See how the sausage is made right in your old ear holes there. Live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. And of course, however you listen, live after the fact, via the app, whatever it may be, hit us up with those questions, those comments. We do love to hear from you guys. This is usually where I introduce my usual cadre of cohorts or cadre of evildoers, depending on how you view them here in the option market. We're going to mix it up a little bit today. A couple newcomers to the old option. Well, not newcomers. They've been on before, but it's been quite a while. So new to many of you, perhaps, out there. But let's start with an old standby. Let's head out to the region known as St. Charles. We are joined by Uncle Mike Tosaw from RCM Wealth Advisors, who is threatening listeners to one day join the 21st century and join Twitter. Uncle Mike, how go things at RCM Wealth Advisors, and how goes the great Twitter quest of 2017?
It's going to be a longer quest than most people would have to go through to get onto Twitter. But nonetheless, all is well. Life is beautiful, as always, in the beautiful, sunny, scenic St. Charles, as Mark Longo puts it.
So you get for being legit and actually going through compliance before you set up your Twitter. See, you just be like the rest of the scammers out there and just throw out, you make $1 million tomorrow with no skill on Twitter, and then you'd be off to the races, sir. Your compliance, your integrity is holding you back, sir. And also joining us from somewhere out in those hinterlands, not exactly sure where as it relates to St. Charles, but somewhere out in that general region outside of Chicago. We are also joined by my usual Friday cohort companion. He's getting bumped up a day because, of course, the markets are closed tomorrow. So, unfortunately, no Vol Views, no Twifo, at least no live ones. We'll put some greatest hits out to the feed for you guys to keep you busy, because I know you get mad when there's nothing up in your feed on those days. But we thought we'd bump him up a day so he can still get his futures options fix on the show. He is Mr. Nick Howard, the founder of QuickStirke and my cohort over there on TWIFO. Mr. Nick, welcome to the Option Block program, sir.
Hey, we're not quite as west as St. Charles. We're in Glen Ellen, DuPage County out here, so we're not too far off. But glad to be on today. I did need a little bit of a fix, but we'll see how the show goes. Then I'll tell you afterwards.
There we go. I knew you were Jones, and you were sad you weren't going to get your TWIFO fix this week. Blame the markets. Don't blame me. Everyone's shut down tomorrow. I didn't make that decision. That's beyond my pay grade, as hard as that is to believe. And let's go a little bit farther afield. Usually we go to the East Coast to bring on the rock lobsters. Instead, we're going to go all the way out to the hinterlands of the West Coast. We're somewhere in those environments. I'm not sure exactly where. I'm sure he'll tell us in a second. Is good old Ophir Gottlieb, he of CMLViz.com fame / infamy, the old options back tester in full effect. Ophir, welcome back to the Option Block program. And whereabouts in those Western Coast hinterlands are you beaming in from?
I'm from the small town in the wild, wild west called Los Angeles.
Oh, I've never heard of it. I'm not familiar with this area. Certainly from an options perspective, you might be the only guy out there who knows what a put and a call are. So certainly a bit of an options wasteland, shall we say. I've talked to quite a few people over the years who've tried to make forays from an options perspective over there in Southern California. And it's a challenge. San Diego, LA, not a lot going on from an options perspective. Who knows? Maybe you guys will change that. Meanwhile, though, let's keep on rolling with our program and kick off the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. Like the man said, this is indeed the portion of the program where we break down what was catching our eye in today's market activity. Another interesting one out there on the old street, which, of course, as we're putting this out, recording it and broadcasting it live, actually 10 after 3 Central here, a little after 4 Eastern, of course. Most of the major indices closing off fairly aggressively on the day, about 0.5%, pretty much across the board. The tech-heavy NASDAQ, a little bit of a laggard there, only off about 0.3%. And, of course, all this red on the screen means VIX cash is just blowing the doors off of our downside estimates from volatility views. Good thing we have no show tomorrow, because otherwise, so far I'm looking about 3 handles off from where I was predicting. One of my uncharacteristically wildly inaccurate weeks out there in the crystal ball perspective. So I think the market's being closed tomorrow may have saved me. You never know. A whole day, a lot could happen. VIX could sell off aggressively, but right now we're getting a lot of that creeping VIX love out there in the old market. Like I said, closing just shy of the 16 handle, about 1590, 1587 or so in that range. So let's turn it over to my cohorts now. Let's start with some of our newcomers. Maybe Ophir, we'll let you opine first. What was catching your eye in today's market activity?
Yeah, so I tried to find a couple of interesting companies with some activity. So I looked in the shipping realm, and it looks like DHT Holdings, which is traded on the New York Stock Exchange, ticker DHT. Looks like there are some call buyers in the July 5 line. Looks like they're paying 25 cents. 4,000 times on an open interest of 3,100. And it looks like the vol actually spiked because of those buyers, up about 11%. And this is a company that trades, I don't know, maybe 600 calls a day, and it did 4,200 on that one line. And then, interestingly, another small, that's by the way, a $400 million market cap shipping company. There's also another shipping company, CMRE, also small, about $600 million, had some similar action. It looked like the May 8 calls are trading for 20 and 25 cents. And they actually have earnings coming out probably in about a week. And I believe, that was on no open interest. So that was all opening. So that's what I saw. A couple of shipping companies with vol rising and some, looks like naked call buying.
We love all things naked particularly the call buying here on the old program. But, this has kind of been an interesting refrain we've seen repeated here for some time on the show. Of course, infamously with good old dry ships. That was about a month ago, I'd say, a few weeks to a month ago now. That was probably one of the more infamous pops, aggressive, shall we say, short squeezes, call it what you will, out there in the shipping lands. But of course, shipping has been a hot commodity of late. Of course, they are shipping a lot of commodities around the world, and of course, the growth in Amazon and other big outlets requires a lot more shipping to get that stuff to your door. You can't just do it all drones, even though that would be pretty cool. So these shipping companies are getting a lot of love. Why they're getting so much love, particularly today, I agree, the DHT stuff kind of interesting because they're pushing way more than their ADV in one strike and in one volume name. But still, interesting stuff. So shippers getting a little bit more love today, I think, which is kind of interesting. We'll get into some more usual activity in a little bit, listeners. But first, let me turn back to good old St. Charles. Uncle Mike, what was catching your eye in today's market activity, sir?
I would say the bomb. Going into the day, we had relatively a stable market. And then we dropped, I believe it was the biggest non-nuclear bomb in U.S. history, I think is what it was. I don't know if that was the exact statistic, but I'd say that's kind of the reason with which they're not I think very strongly that that's the reason with which we stumbled throughout the day today in the markets. The interesting thing that I noticed, though, even after that happened, the markets didn't drop a lot. We didn't even drop 1% on the day, so there's no reason to be fearful or panicked, I should say. And now I know Longo's going to quote me and say, there you have it. Tosaw says to panic and sell everything. No, I don't say that. But what was interesting to me is that even with the news of the bomb, we did not rally that much in the precious metal arena. We had a little bit of a rally in gold today, a little bit of a rally in silver, but not a lot with that fear. VIX is not up a lot from the open of the day till right now, but a lot of this goes back to what we had talked about on the Monday show when the VIX had that huge rally. Somehow the markets have ways of knowing things into the future. And I just remember Andrew's quote, the VIX rallied on no news, for no reason on Monday. And so, well, maybe this was the reason. Somehow the market has a magical way of knowing things into the future.
Yeah, when you drop one of those MOABs, one of those mother of all bombs out there, there's probably not a lot of data points out there, but there's certainly a correlation between an increased VIX and dropping massive ordnance. I'm sure someone could break it down out there. Maybe an interesting intersection of military research and financial research. We can bring those two universes together and correlate MOABs versus VIX. I'm sure it would be an interesting chart with only a handful of data points, thankfully, out there. But you're right. Certainly that was a huge driver of all things vol, all things VIX, all things downside in red today on the old screen. And mixing it up, like I said, a little bit today. Usually we do a lot of futures options breaking down on TWIFO on Friday. But again, kind of closed. Mr. Nick giving me those that sad face over the email today saying he's missing the show. So we thought we'd bring him on today to do a little bit of some futures options rundown for us here today. Mr. Nick, keeper of all things QuickStirke, which, by the way, listeners, no show tomorrow, but you can still follow it right now, actually, as we're doing the show. CMEgroup.com/TWIFO this week in futures options. You pull that up and you can follow along with all the reports that are generated there completely for free. So you can get exactly what Nick's going to break down for you right now. The skew, the volume, the implied vol, the open interest changes, all that good stuff. Mr. Nick, I know it's been a somewhat quiet week overall, except for perhaps today. Some things lighting it up on the old screen today. But what was catching your eye this week and indeed today from a futures options perspective out there?
Yeah, well, I think I'll try to talk to something that Andrew said as well. But just looking in general, again, like we've mentioned for the last few weeks, the crude oil market just continues to get decimated from a volatility standpoint. We've been running up in price here over the last week, and not running up. We've been jogging up, and continue to move higher in there. But what that's doing is it's knocking down the volatility pretty substantially. So we're seeing some volatility levels that we have not seen in a long time. A couple things. So if we look at crude and we look at let me bring up the report here, and we look at, for instance, I'll go out to the June contract, which turns into, starting Monday, it'll it'll be a 30-day contract. So what's nice about that is it lets us look at our accounts maturity data and sort of go with an apples to apples comparison. And the July contract is a 60-day contract then starting on Monday. So we're like 34 right now and 63. So what we're seeing there is, continued decline in at-the-money volatility today. And that 30-day contract, which the June contract is right now, it is trading below 23%. Now, that's still not as low as we've as we've seen in the past. In fact, we saw lower levels when we were up really high in the 90s years ago. But how we saw those lows come about was just the market trending sideways. And what you're seeing now is a continued trend sideways. So even though volatility is low by standard of where it's been of late, it's not as low as it's been. We've been well below 20 when the market continues to move in a sideways pattern without any really expectation or feel that it's going to go higher. So that's kind of the first sort of same old thing. And when you look at the volume out there, you're seeing a pretty balanced volume out in the first 4 contract months between the calls and the puts. Probably more calls, a tremendous amount more calls in the July, but that's also, we talked about it last week a little bit too, how July was sort of the low end of the near-term contracts from an open interest standpoint. So we got a little bit more of that coming through. So again, low volatility there. That a couple things about that. So that 30-60 volatility spread, that 30-day, 60-day volatility spread is probably as wide as it's been in a long time. So I was looking at that as well, and that's pretty wide. So that's something to take a look at, that June, July, and it'll match up perfectly, like I said, on Monday. The other thing is that we want to keep an eye on the volatility. It's low, but we think it could go lower. But a nice way to maybe take advantage of the fact that the June contract is low and the July contract and that spread is trading high is maybe keep an eye and take a look at that spread itself, or on the butterfly, meaning the June, the July, and the September butterfly. So, some interesting stuff there out in crude. And with all that said and done, even though volatility continues to get kind of hammered, we're still seeing a 3% increase in open interest, and that doesn't even include today's trade. And the big trade out there, since we are talking about bigger trades that occurred, a lot of volume in the 57 calls in the July contract for most of it on Tuesday. So we have almost 65,000 that traded. That traded out there this week, and then the 62 strike traded another 35 or 36,000. So you see some people, grinding. We're grinding up there, but you are seeing some looks out there into the future in terms of the upside calls. And then the other thing to keep in mind, the other thing I'll mention is, like, if you look at the corn and the beans, seeing a lot of longer dated upside trading, and you're seeing that reflected in the way the vol curve looks as well. So the calls have the corn has the calls bid quite a bit over the puts, and then the same thing from a bean standpoint. I think, without me looking, I think that's what I remember. And then just to address the gold comment, we're up $32 this week, and that's about 2.5%. So. And volatility is up this week as well. So it did catch a little bit of a bid. And when we go out and look at what the volume did for the week, we're looking at the put-call ratio. The calls are really winning across the board. So it looks like there's some extended thoughts in terms of which way that market's going to keep going.
Yeah, all things shiny stuff. I was going to actually, speaking of shiny stuff, I was going to have you do a little breakdown of all things silver this week, too, because I know Uncle Mike is desperately refusing to do anything with this silver collar that he set up. Oh, was it about 3 years ago now, Uncle Mike? And he's yet to adjust it once here on the show. But again, only like a 7-cent move today, so not a lot of love for silver this week. And Uncle Mike, I think you just picked silver, Uncle Mike, because you wanted to just do nothing with it. Is that the case?
Of course. I figured I'd pick a nice, good, boring thing like silver. And it was not 3 years ago. It was in early January. I put the collar on, and it's a wide enough collar. So in longer term, I figured I'd be doing more adjusting on it, but it just, with the exception of the one downturn a few weeks ago, silver has just been pretty much going up this whole year. So I may or may not have been able to adjust a couple of weeks ago based on my goals for the collar, but in reality, when you have a wide collar and it just continues to go higher, and it's longer term like this, really not a lot to do on it. I've looked at a lot of different things, and I'm thinking right now that if SLV does get up My next price point of what I'm guessing I might do something at would be if SLV goes up to 18, but we're not quite there yet. And we did creep up above the year-to-date highs through the 17.5 mark recently. So we'll see where it goes.
You know, you came on here, you talked a big game, promising us just intra-week adjustments, hundreds of adjustments by this point, and so far, I think there's been literally zero. So all that silver collar talk, we'll keep an eye on it, but not a lot of action, at least not from an adjustment perspective. There are worse things than having the underlying slowly going in your favor. Certainly worse things than that, but that said, we'll keep an eye on it. We had talked a little bit about silver a couple of weeks ago on TWIFO. There was a little bit of spike in activity out there then from an options and volatility perspective. But other than that, you're right, it's been kind of quiet sailing out there in the silver waters of late. But we'll keep an eye on that. We'll also keep an eye on some of the funkier trades going up in the options market today, because it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the odd block. This is indeed the portion of the program where we break down what was moving, shaking, rocking, rolling, and just generally weird today in the old options market today. Let's kick things off let's go out to Treasury land. We haven't delved into those waters in quite some time. In particular, IEF, that is the iShares Barclays 7 to 10 year Treasury Bond Fund. Say that 5 times fast. Closing today just a tick under 107, 106.94, and in that range, up about 0.3% today. So it wasn't a rock'em sock'em underlying day that lit them up. This is the name that does decent volume from an odd block perspective, about 2,700 contracts a day. That's roughly 8 to 10x what our typical odd block candidate usually averages. So that's not bad paper. Today doing about 11,000. Not bad there as well. About 12, almost 12.5 to 1 puts over calls. That should give you some inkling of what caught our eye out here today. And if you listeners pull it up for yourself, go up to IEF on your platform, your analytics suite of choice. You just don't have to scroll down very far to find it. It kind of jumps off the page at you. It's the May 106 puts going up a whopping 10,000 times in one block over there on the Philly. Marked buy right. Also saw some stock going up with it as well, about 380,000 shares. So it looks like we have a delta neutral print going up, puts in stock. The question is, the execution was a little bit questionable mid-market. Stock also printing a little bit lower, so it does have a little bit of a head scratcher as to whether this was someone coming out here and buying himself some puts in stock, in which case he wants some nice rock'em sock'em robots to happen out here in IEF, or the opposite case, he's selling himself some puts in stock, in which case he wants nice, quiet, settling right where we are, maybe a little bit lower, and then not so much. We did see a little bit of a tick down in implied vol, which all other things being equal is usually an indicator that our friend out here was blasting away, particularly in a name like this that isn't very liquid, so you can usually read those I-vol changes a little bit more easily in names like this. So that also, with the stock printing a little bit lower, does indicate he probably sold the puts and sold the stock. But again, we'll have to dig in a little more tomorrow to know for certain. Looking back at the year that has been out here in IEF, it's kind of been had a bit of a range, getting as high as about nearly 114 back in late summer of last year, and then dipping down as low as about 103 and change in December of last year. So it's kind of had quite a range of late. It's kind of been hit a rare near-term low right around 103, nearly 103 and a half, or in that range, and has slowly been ticking up. That was back in early March, so it's been ticking up pretty much over the past month up to about where it is right now. We're at nearly 107. So I guess it's a good thing we brought on Ophir, he of all things visualization out there in the options market, to maybe help us see through the fog of this trade a little bit. Ophir, I know you were busy watching the shippers out there today, but did this trade catch your eye at all? These puts in stock and IEF, and what is your visualization? It's easy for me to say. What does your visualization software tell you about what actually went up out there? Does it look like a put in stock sale to you today, or you think it's the other side of the coin?
I'm gonna say my crystal ball. I feel like this is a vol seller. I think the sort of confirming evidence is that these puts are now offered at 60 cents. When they went up, it was mid-market 55, a 5 double at 65, another at 60. And I mean, the IEF actually printed up on the day, so that about 30 cents, and it's up on the day from where this trade executed, maybe. But I feel like these puts would be a little bit more bid if this was a buyer of all. Even though this was tied to stocks. I feel like this was a sale. It was on no open interest, or essentially no open interest, which you mentioned. So this looks like opening. It does look delta neutral. So my crystal ball says this is a vol sale, leaning on the fact that the puts are now offered at the price that they traded.
Uncle Mike, I know you're looking at this one as well. What are your thoughts here on our puts in stock trading in IEF?
A couple thoughts. First thought is that just to give you guys an idea of it, for my groups, I'll trade anywhere between one lot, because sometimes it's one client that needs one thing, and into the thousands for contracts, just depending if I'm doing a larger group trade. And I don't know if I've ever gotten into the hundreds on IEF before, because I've just done it in smaller amounts. And the reason that I quit trading IEF is because it was so illiquid for what I was trying to do. And so whenever I would do anything in the bonds, which I'll still do from time to time, I would just use TLT, but just in a different setting, just understanding that the longer term bonds are going to be more volatile. But the first thing that I want to know on this is, why didn't he just use the 10-year note and the futures options if you're going to trade that kind of size? That's the first question with which I have. But the second one is the second point I want to make is that to the listeners out there, IEF pays a dividend. And if you ever are going to short stock that pays a dividend, and it's technically not a legal dividend, it's the interest payment. But if you are going to be short underlying that does that, IEF, for example, TLT, or a dividend-paying stock, understand that your account's going to be debited for that dividend. So if it was the other way, meaning that he bought the puts and shorted the stock, or in this case, the ETF, then just so everyone knows out there, if you're ever setting a trade up like this, you pay that dividend. So if you look at a setup and say, oh, I can't lose on this, look, I'm guaranteed to make money. No, the dividend's usually the culprit of what makes your dream trade that's impossible to lose money something that will guarantee that you lose money and not make money.
Well said, sir. If mystery puts are your bag, listeners, don't worry. We got you covered. We got more in store for you. Moving on to our next victim here in the Odd Block. This is, I believe, a newcomer to the Odd Block. I don't think we talked about these folks before on the show. This is Hanesbrands Inc., ticker symbol HBI. Closing today, 21 and a quarter, roughly up about 15 cents. So pretty much roughly unched from an underlying perspective. So it wasn't a big rock'em sock'em underlying day that drove us. You guys are familiar with these guys. They, of course, make all your favorite innerwear and activewear. I'm trying to think if we talked about these on the show before. If we have, it's been quite some time. This is the name that does about nearly 5,000 contracts a day, about 4,700 and change, doing about 12,000 today, about 3-to-1 puts over calls. That once again should tell you what drew our eye. It was another block of mystery puts. Maybe that's the theme for today. Hashtag mystery puts going up out here. This time it was the straight up April. No weeklies, I don't believe, out here in good old Hanes. No, there are not. So just straight up April 21 puts going up for 15 cents. Looks like paper selling these one block on the Philly. Again, total on the day was 5,600, so it looks like maybe 600. A little bit of Me Too paper piling in at the end of the day there. A total of 5,600 on the day. Open interest of about 8,000, so it does appear these could potentially be closers. The initial printed pretty close to the bid. Does look like perhaps a long put holder, a holder of that 8,000 or somewhere around that level. maybe deciding discretion is the better part of valor out here, and closing out about almost 6,000 of that 8,000. Again, the IV also coming down on that strike a little bit as well, so perhaps the 1-2 punch confirming what we thought. Looking back here at the year that was out here in Hanesbrands, they've had a bit of a run. They got as high as about $30 back about a year ago, and then slowly trended down and to about the mid-20s until about January. It looks like their earnings just cut their legs off from under them. They dropped down to about 18 and change after that. They kind of been vacillating around in the teens to low 20s, hitting the upper end of that near-term range again, right around 21.25 here today. So interesting stuff out here in Hanesbrands. Mr. Ophir, we're going to put your visualizer to work yet again here on the show. What's your take here on these mystery puts in Hanes? You think these are a closing sale as well, or is something else afoot out there?
If you look back on the 10th, these puts were pretty active. So the open interest jumped by about 4,300 on the 11th. So trading on the 10th, and they were trading for a lot more. So this is definitely an odd block. All right. Open interest jumped by 4,000, and then today, it looks like a seller today for about that size. So, I mean, this could just be a loser. I'm not sure. This is definitely an odd one. Also, stock traded pretty heavy today, but given the fact that vol, just collapsed today, this feels like a seller. The price looks like a seller. It's on open interest that's greater than the trade, and it looks like that open interest opened on Monday for a lot more. So this could just be a bad loss. My best guess.
Yeah, it doesn't seem like this person is too excited, too enthused about these puts. Uncle Mike, do you concur here? This is a loser giving up the ghost here. Or do you think perhaps something else is afoot out here?
Oh, I sure hope it's just someone closing out their long puts, because we always say we hope the big money, we always say that the big money isn't necessarily the smart money, and if someone's opening a put for 15 cents, I almost hope it's a losing trade as opposed to somebody opening a 15-cent short put.
Hey, 15 cents, that's good money in this low yield environment, Uncle Mike. How many times on this Indeed segment have we profiled people rolling 3, 4, 5, 6 months for 6 or 7 cents? So 15 cents, that's big money. That's big dollars these days, sir. Don't scoff.
Give me them pennies, baby.
Give me them pennies. We all know nothing can ever go wrong with that trading style. All right, one more here. Moving on to the energy sector. Whiting Petroleum, ticker symbol WILL, WLL, closing today $8.56, off about nearly 40 cents, or about 4%. So a little bit of a sell-off out here in good old WILL today. This is the name that does pretty decent paper, about 14,000 contracts a day. So much more active than our typical odd block candidate today, doing about 35, nearly 36,000 contracts out here, about 8.5 to 1 calls over puts. And what we saw out here was some size call rolling. In particular, looked like the May 10 calls. Well, actually, we got May. We got April, May call roll going up here. Looks like the April 11s going up, starting off the day, a block of 10,000 versus the May 10s. Again, straight up monthlies, no weeklies playing out here. Also 10,000 of those. Total on both of these strikes a little bit more, about 11,800 on the May 10s versus about 11,500 total on the April 11s. About almost that exact number open on the strike as well. Coinky dink. I think not. They were doing the Mays for 35 cents. The Aprils, closing those out for a nice juicy penny out there. Went up in 2 blocks over there on the Philly, at least that initial 10,000 kind, the later kind of filtering in. Looks like, as it seems, a bit of a roll from Ape to May. Looks like he wants those May 10 calls. Also of interest, too, though, big chunk of stock going up with this bad boy as well. So at least the roll by itself wasn't enough. We also got a massive chunk of stock, about 1 million shares going up as well, which also puts a little bit of the question mark stamp on this trade. He's put all this together in the bowl and stir it up. It looks like perhaps someone rolling but then selling stock against it, which is an odd and interesting trade in and of itself. Or we have someone perhaps also rolling and then just putting on the stock, or perhaps closing out the stock. Maybe they were sitting on a ton of stock and decided, not really loving the long stock component anymore. Let's closing that bad boy out, and then just perhaps deciding calls. Let's go calls instead. Take advantage of that leverage and that capital efficiency and everything else that options bring to the table. So another little mystery name here in the old odd block. We love our little mystery names, and we got a bunch of those today. This name, Will, has kind of been all over the place over the past year or so, hitting a high of about 14 and change back in May, June of last year, threatening that again back in December of this year, but not quite reaching those lofty highs, and hitting a low of about 6 and change back in August of last year. So that was a tumultuous period from June to August of last year. This thing really getting cut pretty much in half. Kind of been vacillating around the middle of that range right now, and today, of course, closing off again about 4% to 8.5. One more time, we shall look into the visualizer. Mr. Ophir, what do you think was up here with this call roll and also mystery block O stock here in Whiting Petroleum Corp?
Yeah, so this is an interesting one. Yeah, it's clearly a roll. I think everybody loves trading options for a penny, so that's awesome. The open interest on these May 10s has gone from about 2,000 to what is today before this trade to 9,000. So this is a guess, but it's possible that the stock sale was to hedge an oversized call position in May. I guess we'll see. I guess we'll see on Monday with the open interest. But yeah, it looks kind of like standard roll and possible stock sale to hedge a prior position in the calls would be my best guess.
A good guess it is. I could concur with that. Before we roll on out, pun intended, from the odd block, I know, Mr. Nick, you're always looking at futures options trades going up out there. So I thought I'd give you an opportunity. We'll mix it up yet again. Again, no TWIFO coming up on the network tomorrow, so a lot of our listeners will be sad. So if you have anything in your back pocket, anything you noticed, could be a trade, could be crude, could be Uncle Mike's favorite silver, could be something else entirely. Any trades out there catching your interest in this otherwise quiet week except for today? Or was it pretty much just all quiet on the Western Front this week, Mr. Nick?
Well, I think if you'll allow me, I'll roll back to the IEF trade that you guys talked about, because as you were discussing that, I took a look at the 10-year to see what was happening out there. So, do you guys was that an out of the money call, an at the money call? Can you tell from that? I mean, you could tell from that, obviously, but you don't have a yield associated with it or anything like that. But how far in the money, out of the money was that call that traded? The one was.
You're talking about the IEF?
Yeah, the IEF. Yeah.
Those are puts.
There were puts. There were 106 puts going up.
Oh, they were 106 puts,
which is pretty much just near at the money.
Okay, so here that's what I and were they hedged or were they 1-to-1 on those?
Looks like delta neutral, so it wasn't 1-to-1.
Okay, because I was going to say if they were 1-to-1, there was a lot of at the money calls that traded in the 10-year market here today or this week. So I don't know if that would be some sort of spread that somebody would put on, but we're talking. The one thing I will mention of looking at all the products this week is the 10-year had an increase of almost 12% in terms of its open interest. So it traded, almost 2.5 million contracts so far. Well, that'll be it for the week, but a lot of buying into this rally into the 126 strike, which is at the money at this point, and a lot of upside buying, even more so in the June contract. So June, July, and the August, even some far out September upside calls. So. We did have some action in that market day this week. It was basically had gone up for the week, but we did get some bouncing around in there. But that's a pretty significant increase in terms of open interest, and a lot of the new positions coming in the weekly contract as well, which we talk about all the time as being very popular in those markets. So looks like. You're always going to see that the money trade a lot as you move into that strike, but a lot of upside buying, like almost 200,000 or over 200,000 in the June 127 call, which is 1 point out on that contract from at the money right now. But some big stuff going on out there.
Big stuff indeed. So there you go, listeners. You can't get too mad at us. There's your TWIFO fix for this week as well. And because it's Thursday, it's time for Uncle Mike to come on down, play his version of The Price is Right, aka the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it's Thursday. It means it's time for Uncle Mike to dispense his options, wit, and or wisdom about his topic of his choosing. I have a feeling, though, since we're coming up onto this truncated holiday week here, at least from trading perspective in the U.S., the topic of weekend risk and volatility and all other things like that may be top of mind for him. I say they may be because you never know what's going to come out of the pickle/water garden capital of the world. Uncle Mike, what's on your brain today, sir?
As a matter of fact, you are correct.
My insight into you is disturbing to me on several levels.
Yeah, it is, for sure. There's a lot of things disturbing, but that's a whole nother story. I want to go over, we have a 3-day weekend coming up, we're in it right now. There's no trading that's happening now until Monday. So whenever you have a longer weekend, oftentimes I've seen beginners say, I want to sell this premium over the weekend because that's 3 free days of risk. That all these things trading, this time goes by and no trading's going on, so that's free money. Well, not so fast. A couple things. First off, most of the time before a weekend, the weekend vol is taken out before the weekend. Now, on a crazier day like today, maybe that's not the case. We'll find out on Monday whether that happened today or not, seeing how the volatility reacts over the weekend. But the other thing with which I want to mention to that, if you're selling premium going into the weekend, which I think is a more important factor to consider, is the fact that bad things can happen over the weekend, or good things when you want bad things to happen. Either way, bad things for your trade can happen over the weekend. So let's say that over the weekend, we get some type of an announcement saying that we've dropped bombs and there's also more bomb dropping, and that spooks the market. And then come Sunday night, S&P futures are down 35 points. That's very possible, folks. And the reason that I mention that is because if you're looking at the world with your rose-colored glasses on, thinking that the weekend is a time of rest and nothing happens, you really need to be aware of gaps. I personally don't like going into weekends with a lot of risk on the table, just because of the fact that oftentimes, it seems in my 15 years of experience, more times than not, if there is going to be a large market move over the weekend, it's usually to the downside. We usually don't get great news over the weekend to have a rally. Now, it's possible it can happen, and I've seen it happen many times, but most of the time, from my experience, if the market's going to move over the weekend, it's probably going to be down if it's going to move significantly. I'm not talking about 1 or 2 points in the S&P. I don't even keep track of that. But if we are going to have a 10-point move or greater in the S&P, a lot of times it's going to be more likely that it's going to be down over the weekends. So I want to go over a trade that I'm in right now and what I did to kind of hedge it over the weekend. I'm in the 233 short put, or I was in the 233, 223 put spread on SPY, and we came down a little bit today. So I rolled down from 233 to 231, same expiration, which would be Friday the 21st. And I also rolled up. And the reason I rolled up, I rolled the 223 up to the 225. I was able to do it for, I believe it was 6 pennies. And for 6 pennies, I'll gladly take on an extra $2 of protection. So all in all, with that trade in and of itself, let's say that we go all the way through next week and the options expire worthless with that trade itself. This 2-week ordeal that I had gotten into, let's just assume they expire worthless. Now, we've talked about this on the show before. They won't, but I just want to kind of give you an idea of it. I will have lost a whopping 2 pennies on that trade. Market goes against me and I lose 2 pennies. I'm okay with that. Now, in reality, I'll probably be out long before that, but my point is that's kind of one of the ways with which I'm managing risk. Now, going into at about 10 minutes to go in the trading day today, on that trade for every 1 lot, I was probably long about 25 deltas on that put spread. I don't feel comfortable going into this weekend with 25 long deltas. Now, granted, that's well below my normal amount. And we do have a very small amount of risk in place. So even if the market does crash and go to zero, I'll live to trade another day, and all my clients will too. But I still didn't feel comfortable with it. So I decided to just neutralize it going into the weekend. And what I went out to June and I bought a 233 put in June. Now, what does that do? Well, for one, there's not going to be a lot of time decay all the way out in June over the weekend. It's going to be very minimal theta. Now, my risk on that trade, and I bought a half position. So for every 2 lot I had in the put spread, I bought a 1 lot in the 233 put, making it essentially delta neutral. Now, the other risk that exists on this, number one, if the market goes way higher over the weekend, well, of course, I'm going to get my face ripped in on this 233 put, and that's possible. But if that happens, it happens. I feel comfortable with that risk. I feel comfortable that I'm not going to get my face ripped in too badly. So I feel okay with that. Should the market stay the same, not much is going to happen on it. And then should the market go lower, from a delta standpoint, it is delta neutral for now. So I feel very comfortable with that. Here's where the main risk exists on this one, in my opinion, and that's an implied volatility. If vol gets crushed over the weekend, and if that were to happen, and we open up Monday morning with a lot lower implied volatility, that's my main concern with this 233 put, the long one for June. So on there's always some type of risk somewhere, but I believe the fact that we drop a bomb the day before a 3-day weekend, I really don't see us having a large drop in implied volatility over the weekend. It could happen. It could happen that Trump and Putin and everyone from the Middle East just declare world peace and they're all happy and lovey-dovey on Easter Sunday, but I don't think that's going to happen personally. So it's for that reason that where I decided to place my risk was not within delta, meaning I didn't want to take the risk of the market crashing over the weekend. Where I wanted to take my risk of is betting essentially that vol isn't necessarily going to go higher, but isn't going to get crushed. And that's what I wanted to talk about today for weekend risk, just have an understanding of what it is, how you can work to make it so that you're not in a bad position, and also make it so that you can live to trade another day. That's the fun part of it. And on this show, the beautiful thing about it is the fact that we always talk about our winners and our losers. And what I'm talking about right now, we've had a great year so far with this, but this is likely going to be a losing trade. It could end up being a winner by a couple pennies, but this one's likely going to be a loser. And we're going to live to trade another day. But it's going to be a very small one is what I think it's going to be. And that's done through being very hypervigilant on monitoring and making sure that you, as my colleague Andrew would say, do stuff. And that's the strategy block for the day.
All right. Thank you for that, Uncle Mike. And now we'll keep on rolling. Got a few minutes. Maybe we squeeze in a couple of your questions. It's time for an abbreviated mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. We started off the week asking you guys about your favorite name, or perhaps least favorite, depending on your point of view. Good old Tesla. This name giveth and it taketh away. Up another 7 handles after selling off pretty aggressively earlier. It was for a while there, shy of the 300 handle again, even though we were saying when we posted our question on Monday, it was threatening the 315 level. So with that in mind, we asked you guys, how are you leaning in your options trades this month for Tesla? Would you rather buy a 1-month 300 put, buy a 1-month 330 call, sell a 1-month 300 put, or are you going to stay the heck away from it? Remember, when we posted this, it was right around midpoint there, right around 315. Obviously, some of the later developments may have colored some of that perspective. This poll's up for another couple of days or so. So who knows what the heck will happen in Tesla in that time. Maybe Mr. Nick, we'll start with you, give you a chance to weigh in. I know you don't watch a lot of equity options. This one, of course, is top of mind for a lot of people. What would your call be if you had one? And then what do you think, more importantly, what do you think is winning our poll out here? Buying a 1-month 300 put, buying a 1-month 330 call, selling a 1-month 300 put, or staying the heck away from it?
Can't I sell the 1 month 330 call? That's not an option.
Only 4 choices, sir. You can't go that far. People always say that. What about the iron condor swap? No, we don't have enough time or space for all that stuff. So we try to make it very straightforward.
I would say I definitely wouldn't. I would not do none of the above, and I would not buy the call. I would probably, if I just look, I did pull up the chart while you're talking about it. I'll buy the 300 put. I'll go with the 300 put. And my guess would be that there are people who are going to say sell the 300 put.
Interesting. So a little recent price action coloring your opinion perhaps a little bit. Mr. Ophir, same question for you. What do you think? What would your personal choice be if you have one? And what do you think is winning our tumultuous Tesla poll?
Yeah, brace yourselves. I would buy the vol. I would actually buy the 300 put. I know it's a miracle. If these are my choices, I'd buy the 300 put. I think that the poll. I think the poll will agree. I think they'll say buy the 300 put. I don't see the poll coming out buying a 330 call, and I'm not sure anyone wants to sell an at the money put right now. So I'm gonna say buy the 300. I would buy the $300 put, and I think that's also what the poll said.
Uncle Mike, bring us home, sir. What is your call, and what do you think is winning?
I'll stick to my guns from what I said on Monday, but I also want to say full disclosure, I wouldn't touch Tesla with a 10-foot pole in reality if I had to. So, but as long as we're in fantasy land here, I think the audience is going to be buying the puts, and I'm going to be a bull on it. I'll bet Elon Musk is going to come up with a way to make things happen, and I'm buying the call, baby. We're going to the moon in our Tesla.
You're feeling the Musk love. Hashtag feeling the Musk love. I like that. I kind of thought the premium harvesters would have their way with this. They were kind of winning early on. But I think recent price action, like Ophir, may have scared a few people away from that. So right now, the winner it's pretty close across the board, actually, surprisingly so. So pretty even opinion on Tesla in our audience right now. 32% saying they're going to stay the heck away from it. I can't really argue with you on that one. 25% actually Uncle Mike's way, saying they're going to buy the 330 call. So the call getting a little more love, which is interesting given the fact that we broke through 300 recently in this name. 23% dropping to less than a quarter now, selling the 1 month 300 put again. So that's obviously a dicey prospect right now. And only 20% coming in on the end, buying some vol. Mr. Ophir buying the 300 put. Again, that poll's up there for a couple more days. You guys have your chance to answer at options if you haven't already. We'll see if we can squeeze in one more really quickly. I feel bad for this guy. He asked, we have a bunch of questions coming in, but I like to favor the live questions whenever possible. We had this one in the live chat on Monday. We didn't get a chance to finish his question. He asked about newbie options recommendations. We kind of got stuck on that. But he also asked about AMD. Hopefully he's done something since he asked us, because he asked about buying protective puts in AMD. Initially he said 13.25 was his break-even level. Now he's saying about 12.25, which is good for him because that's pretty much exactly where AMD has sold off to. So unfortunately, hopefully, Mr. Anderson Investing, you've already done your hedge. But that said, we're looking at this going forward really quickly. I pulled up AMD here to follow along. I'm assuming you want to hedge through the earnings event, which is on the 1st. That would be the sensible play. So you got to go out at least into the May weeklies. Let's look here. Let's pull up the May weeklies expiring on the 12th really quickly. Right now, kind of at the money at your level, right around 12.5. That puts a buck. $1.10 actually if you lift the offer, which is gross. You don't want to just do that. So obviously you want to do some sort of vertical out here. You didn't write in with your levels of what you're comfortable with here in AMD. So we'll kind of have to intuit a little bit on your part. Let's say maybe you want to protect down to 11, so you get a nice 1.5 on the downside. That put is about 40 cents. So that'll get you about 60 odd cents to buy for that spread. Not bad. You're getting a little bit more reasonable, but still a substantial outlay. So then I guess it's up to you what you feel like you like to do. If you liked it at 12.25, you want to buy more at 11. If you'd like that, then you could go the old route of the ratio, sell 2 of that puts. Now, of course, you can be buying another lot at 11. So if you're okay with that, then now your price is down to about 20 cents. And on the upside, again, you didn't give us your outlook, but if you want a little room to run on the upside, maybe let's say 3 handles, 2.5, 3 handles. So let's get up to about 15. Then you could sell that call also for about 20 odd cents. So then your net outlay is somewhere between even and maybe collecting a dime of credit or so. So that's a little bit more attractive. And that would set you up through the week after earnings. But again, you didn't give us any of your outlooks. So that's all kind of guessment on our parts as to what you would like to do with that. Uncle Mike, if someone came to you right now, said they want to put on some sort of protection in AMD, I know you don't have a lot of time, but what would you be saying to them right now, aside from just gobbling up this $1 put, which seems quite pricey?
Right, it does. Real quick, the quick look, the first thing that I'm seeing is perhaps just buy a put spread, sell a call spread. So in other words, perhaps the 1250 11 put spread along. So, and I do it in a 1-for-1 ratio with 100 shares of stock, a one lot with a put spread, and perhaps maybe the 12 sell the 1250 covered call. But then in case this thing really does run up, because we have near a pretty decent sized straddle at the 1250 level. If that were the case, then I would say maybe sell the 1250 covered call and maybe buy the 1350 call. Got a little bit of juice to the upside. And but in case it does run up to high heaven, you have something in place to prevent that from happening. So that is what I would do off the top of my head, but I would give it more than 30 seconds to analyze if someone were to come to me.
That's the fun of the show. You only get like 8 seconds to do all the math. I like that. Aggressive covered call, 12.5. Interesting. That's why the show is fun, listeners. Everyone gets their own opinion. Nick or Ophir, anything to add here on these AMD puts before we roll on into our final segment?
I love that trade, actually. I mean, without a lot of thought, but 12.5, 11, and then going back on the call side. I agree.
There you go. 3 votes. Mr. Nick, I'll save you from having to weigh in because we'll keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, I'm glad we got to squeeze that one in. I felt bad whenever we can't finish a question on the show. It lingers with me. But we get so many, that's the problem. But it's a good problem to have. We can't really complain about that. Let's really quickly go around the horn. Let's start with you, Mr. Nick. Obviously, the weekend is already upon us. We're in this truncated week. So we're really looking through the weekend into next week. What's on your radar? What are you keeping an eye on for into the coming week, Mr. Nick?
I think same as we've been talking about for a long time. I keep an eye on the crude market just with the way that vol term structure is shaped, and it appears to me that we're going to start to hit a bottom and how far the front can go down in comparison to the second and third months. So I would continue to watch that June July or the June July September butterfly, June July spread or the three option butterfly. The other thing keep in mind, and this is going off of some new reports that we have out there. It looks like there's something's going to happen in the corn, wheat, in the bean market. So I would keep an eye on there. We got some really tilted vol curves out there, some really bid calls, and some really offered puts in the corn and the wheat. So that may be in line with some of the fundamentals going out there in terms of what I'm hearing from the market. But I would just look at the continued slide in the crude vol, and like I said before, it can still go down, but I think there's some spread opportunities there with the calendars. And then also maybe look for the worm to turn in some of this skew in the corn and the wheat.
Uncle Mike, same question for you, sir. What are you watching through this holiday weekend into next week?
Well, I think it's just geopolitical risk right now. It doesn't really matter at this stage what earnings are going to be or what they may or may not be over the weekend. Just watching the news to see what's going on in the Middle East and to see what we do, how we react to it, and going to church on this weekend as well. So that's about it.
And Ophir, last but not least, sir, what are you watching for the rest of this week into next week?
Yeah, it's got to be the exogenous factors to the market. I mean, it looks like geopolitical risk, et cetera, could be a big impact, and that means we could see correlations going up and everything moving together. And, that could be the sign of a little bit of a downdraft when that happens in the market. But it's just got to be the exogenous factors right now. It's just not company specific anymore.
All right, everybody. That music means we've come to the end of another epic. This is an actual epic 4-man edition here of the Option Block. I like to mix it up every now and then, always kind of fun. But before the music calls us off, let me check back in with my cohorts here, my partners in crime, see what they have cooking that may interest you. Let's start with you, Mr. Uncle Mike. What's cooking in your neck of the woods, sir?
Well, we still have the Hour with Andrew promotion going. If you do trade your own money and are possibly interested in saving some money on your commissions and having the ability to have advice with a phone call to myself, feel free to give me a call to learn more about that. Also, what we are throwing in right now as a promotion is if you end up being a new client of RCM, then we will throw in 1 hour with Andrew Giovinazzi. That's right. You can ask him whatever you'd like about term structure. He'll talk to you about the VIX. He'll talk to you about anything you'd like, including chainsaw maintenance. For more info on that, send me an email or give me a call. I'm at mtosaw@rcmfs.com, or give me a call at 312-212-3531.
I'm definitely in for that chainsaw maintenance. I'm always needing some tips on how to keep my chainsaw neat and tidy and ready for the season when I eventually do sometimes use it here in downtown Chicago. I'm not sure when that will happen, but my chainsaw is ready for that case. All right, and Mr. Nick, you guys are always cranking away on cool things over there on QuickStirke. What do you got coming down the pike for us, sir?
Like we mentioned last week, I'll reiterate it again. Today, we will be opening up This Week in Futures Options report during the live broadcast, so all of the links will be active, so you'll be able to dive in and take a look at what the trade flow was, what the quick skew number, even the quick skew is going to be available, what the quick skew looks like, all the historical data that we make available right from the click of the main report itself. So that'll be out there 1:30 next Friday. We already planned on that, and we'll do a build this week to make sure that happens. And then also we'll preview some of the new quick skew reports that we have. So we're going to be showing a benchmark report, so you'll be able to take a look and see how quick skew has averaged over a certain periods of time over the course of the year, what it looks like now, and whether it's rich or cheap in relationship to that, as well as an individual report per product. That we'll do something similar, and you'll see the charting. And then we're also going to be doing a rich, cheap report using the quick skew across all the expirations in a given product. So we'll have some interesting things coming down the lane here in the next couple of weeks.
All right, and last but not least, Mr. Ophir, you of all things visualization, what is coming down the pike? What can we look forward to from CML Viz?
Sure. First of all, the live futures options reports and the hour with Andrew, both of those sound really good. So as far as we're concerned, we're here to answer the questions. I mean, have you ever been ready to place an option trade and wondered, I don't know, should you trade monthlies or weeklies, or should you trade earnings or avoid earnings, or should you put a limit on your short position so you sell a $2 spread, it's now at 20 cents. Should you buy it back, or should you sell a put or sell a put spread, or buy a call spread, or some combination? All of these questions have an answer, and that's why we built the CML trade machine. And we're so confident that you'll become a member for life that if you buy it and in the first month you don't like it, we'll just give you your money back. It just doesn't happen very often. So that's what we got going.
There you go, money back guarantee. Check it out, cmlviz.com. In fact, we've seen a lot of people have pitched us on options visualizers and back testers over the years, and not a lot of them have really worked very well. So if you're interested, check out Mr. Ophir's and his team over there. They got some cool stuff cooking. I think you will like it. And it looks like some more votes pouring into our Tesla as we were talking. More love for the calls, actually. 26% now saying buy 1 month, 330 calls. If you haven't played yet, head on over to @options on Twitter. That's where you can cast your vote. You got a couple days left to make that heard. And of course, head on over to the website to get all the other good stuff, including all the archives and everything else. And we love to see you guys there. Unfortunately, like I said, no live broadcast tomorrow, so this will be it for your live stuff for the week for us. We get some stuff in the feed there. You get some best ofs. So don't worry, we got you covered there. And on behalf of Ophir and Nick and Mike, and indeed myself, and even the Rock Lobster, wherever the heck he is these days, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, for joining us live. We love you guys too. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.